speak to Mr. Omodio now, joining us to give us more insights on this and perhaps what we could expect as we get to the end of the month. This year we have Mr. Ambrose Omodio. Mr. Omodio, good afternoon. Welcome to the program. So, I mean, we see 6%, 6.66% return so far in the month, for the month of July. Can we expect it to hit 10% by Friday as we end the month of July? Is that too much to ask for?
Yeah, it's too much to ask for. I would tell you it's too much to ask for. This is not the end of the quarter. The end of the quarter, especially that, window dressing for end of the quarter, we're going to push it. For this a monthly end, most times we don't react to movement in Nigeria. For the mature market, we can react to end of the month. But here, because most of the portfolio managers do their account in every quarter, that is why at the end of the quarter you see window dressing. But for this month, good news that the earnings that are in the market are really beat expectation. That's why we're seeing some missed numbers. The majority of them were seen that from, like you just mentioned in your intro, the one that came from the NGX, can see that increased activity on the market have impacted their performance, which also reflected on their bottom line. On that, I recommend the kind of rewarding shareholders with about $1.30 going to dividend. But we're looking at the general market valuation. Even at this point, you said that the market return just 6.6. For me, I just smile. Don't forget that in the month of June, the market, overnight, so speed the market lost from the peak of 2,500 and 67 basic points down to almost below 240. But now markets are rebounded in the month of July because of what the earnings expectation, and these numbers are coming, and also investors are happy that it shows that the company invested are still sunlight, that those companies are still very, very much strong. But I believe that as we see more earnings between today and the 31st of July, it also adds momentum to the market. But I believe that like we just said, institutional investors that understand this market, they don't react to results as results hit the market. It's individual investors like me and you that react to results, but they take time to analyze their number, to then do their diligence, and also their committee investment to approve it and not come back to the market. Yes, we will see that because the election is coming closer, that foreign investors will be running back from the market. For me, I don't plead to that, because from 2019 or post-COVID-19, we have seen that our local institutional investors support the market for straight 7 years that the market have rallied. They are still in the market. Now that the PECO have given a lot of window for them to invest in the market, I see that the people to sustain our market even during the election. Right, actually, I agree that in the election there's a lot of uncertainties, but because they understand the function of Nigerian market, they are here. They know that every 4 years our market will have to slow down a little because of the election. But in Nigeria, election have not killed our market for anything. After election, we see another rally.
We'll still continue. But Mr. Omodio, what do you see as the next driver of the market at this point? The earnings, I mean, they're thinning out. What's the next driver? Negative or positive?
Earnings is one of the things that will drive the market. One, the next is that liquidity that comes from election spending. Like I saw one of the programs, they said that foreign investors will be going out of the market. Fine, because they are allergic to what risk. But we have our own institutional investors that are here that support the market all this while. They are still here to support our market. And I said earlier that the PECO have open window for them to spend more on the equity space.
Yeah.
For me, there's no cost on it.
After all, about 90% of investors in the market now are domestic. So I mean,
that's why there's no cost for that. Exactly. That earnings plus from election spending will add more strength or more energy to the market. But let's follow value at the end of the day. That's why I say, as we speak now, the market price to earning ratio is below 12 times for me, so that the market is still cheap. That's why we're seeing this high. But I believe that also sectoral EPS will also price to earnings will also guide investors. But as we speak now, the banking sector is still very, very attractive because it had the lowest price to earning ratio. Look at bank like Zenith Bank having 4.2. I can tell you that stock is giveaway. Look at the telecom sector that has about 49% times. Notice that there's a lot of potential in that telecom industry. Investors should invest with knowledge. Use all this period to know where to put money, because after the election, I'll tell you, Nigeria will be a boom. But I think that we are the best foreign market this year.
Right. After the election, and then also after the Dangote refinery appeal, those are two major drivers. But thank you so much. Thank you so much, Chief Operating Officer at Invest Data Consulting Limited, Mr. Ambrose Omodio. Thank you for your time.
Thank you for having me. Yeah, thanks for having me.